huge day. I think the GDX and GDXJ were each up about 5% on the day, a little bit more. A mixed bag today. Some stocks continue to rally, a little bit of a pullback. The price of gold now is back above 4,100. Let me give a quick check where it is here on Tuesday night. 41.40, up another $11 from today. And silver is back at 51.5. That the gold and silver stocks are going to hit new highs before gold makes a new high. Maybe not silver. Silver could take out the high, which was 54.40-ish. What is going to be driving gold to record highs and silver to record highs and gold and silver stocks to new highs is going to be the Fed.
In today's news recap, China's October net gold imports via Hong Kong fall about 64% from September. China's net gold imports via Hong Kong in October fell about 64% from September. Hong Kong Census and Statistics Department data showed on Tuesday. As the world's leading gold consumer, China's purchasing activities can significantly influence global gold markets. The Hong Kong data may not provide a complete picture of Chinese purchases, as gold is also imported via Shanghai and Beijing. Net imports via Hong Kong to China for October stood at 8.02 metric tons, compared with 22.047 tons in September. China's total gold imports via Hong Kong reached 30.08 tons in October, down 17% from 36.275 tons in September. What we're really seeing here is a weakness in the Chinese demand while they have been firmly strong earlier in the year, said Ross Norman, an independent analyst. Domestic demand is probably being met locally. So the market's kind of looking after itself to some extent. Last week in China, bullion traded at prices ranging from at par to a discount of $5 an ounce compared with the global benchmark spot price. Demand in China was lackluster last month, with discounts of about $48 to $60 an ounce being offered to attract buyers. Swiss gold exports to China in October plunged 93% to 2.1 tons as elevated prices squeezed Chinese demand, data showed last week. Meanwhile, Beijing on November 1st cut a value-added tax exemption for certain gold purchased through the Shanghai Gold Exchange and the Shanghai Futures Exchange, a move expected to push up costs for gold used in jewelry and industry. However, China's central bank added gold to its reserves in October for the 12th straight month. The bank's gold holdings increased to 74.09 million fine troy ounces at the end of October from 74.06 million in the previous month. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
I believe the Fed is going to cut rates again. And if you recall, the last FOMC meeting, that's when Powell threw a monkey wrench into the whole, rate cut, narrative by kind of saying he didn't really know what he was going to do, that it was kind of like a coin toss, that, they could cut rates, they could leave them the same. They really didn't know. It kind of depended on the data. And that really pulled the rug out from under these expectations. And the markets went down. They were nervous about it. And if you recall what I said on my podcast, I said I didn't believe the Fed. I didn't believe that they weren't intending to cut rates. I think they absolutely knew that they were going to cut rates again. They just didn't want to come out and admit that. They wanted to pretend to the markets that it's not a sure thing, that it's not a lock, and that, they're weighing the evidence, knowing that it really didn't matter. Because the economy is much weaker than they are letting on. And of course, there's a lot of behind the scenes pressure from the Trump administration. So they're getting a cut. But what helped revive the markets over the last couple of days was FOMC members coming out, including again today, and expressing that they want to cut rates, that the Fed is now, or they are more worried about the labor market and softening in the labor market than inflation. In fact, the party line that they're all towing at the Fed seems to be that inflation is behaving, that inflation is coming down. And so what the Fed is really concerned about is potential weakness in the labor markets. And that's, of course, exactly what the stock market and other markets want to hear. And I think that is what is driving the rally. And I do expect now, I think the odds of a December rate cut, which had fallen back down from like 90% to 50%, are now back up above 80%. So that's what's going on with the markets. And I think that is also why you're going to see this surge in gold. And I think the dollar is now just rolling over. You know, I talked also on my last podcast, or I don't know if I was on this podcast or the Schiff Gold market wrap, about what was going on in Japan. And that was also hurting our markets until the Fed came in with a rescue. And, you know, these statements may very well have been damage control, as FOMC members were worried about the markets and they thought they needed to, throw it a lifeline. But I mentioned yields in Japan had moved above 1.8 on the 10-year. They backed down. Now we're back above 1.8. 1.81 is what I'm looking at now. This is a new 20-year or so high as we continue to march towards, and then I believe through, 2% yields. Now, 2% yield on a 10-year may not sound like a lot, but in the land of the rising sun, it is, when you're used to, or they were used to, yields of 25 to 50 basis points. So this is a huge move, and it's not going to stop at a round number. But I think that round number is going to be a significant event, because the cost in Japan to the government of financing this massive debt is going to be significant. And I mentioned, yes, it was on the Schiff Gold market wrap, that what I think may happen in Japan is that to finance the massive stimulus plan that was just announced, that they will sell treasuries to pay for it rather than increasing the issuance of JGBs, because the Bank of Japan, or the government, indicated that there would be no increase in the issuance despite this huge stimulus package that needs to be paid for. If they're smart, or I know they're smart, but if they do the right thing, they will sell U.S. treasuries, which is going to be very problematic. But of course, that's another reason why the Fed is going to have to go back to quantitative easing and easy policy to try to offset the torpedo that the Japanese will be launching our way should they decide to start selling U.S. treasuries, because they're now the number one holder. You know, they're more than Japan. China was, I think, number one, but they've stopped buying. And so we rely a lot on Japan, but that could change.
In today's news recap, gold could hit $5,000 in few months, says World Gold Council CEO. Gold prices could reach $5,000 in the next few months due to multiple factors, including interest rates, continued central bank buying, and high inflation in Japan, said David Tate, CEO of World Gold Council, in an interview with Khaleej Times. He said, "I would be very surprised if we don't see $5,000 per ounce in a few months' time, unless U.S. President Donald Trump gets lucky and gets it right by generating high GDP growth of 6 to 7% with moderate inflation and brings down the deficit. If he does that, that's probably a point at which I'd start to worry for the gold price, because gold has been going higher through an inherent fear of financial failure." the U.S. debt spiral. If you take that threat away, I think it'll turn off. That's my honest opinion. Many global banks have also projected that the precious metal will hit the $5,000 milestone. The latest to predict is the Bank of America, expecting it to climb to $5,000 due to macro tailwinds and sustained safe haven demand. In September 2025, Goldman Sachs also predicted metal climbing to around $5,000 an ounce. There are many reasons why gold will continue to go higher. They extend from just plain ordinary economics to the US dollar, interest rates, tariffs issues, continued central bank buying, and China's decision to allow insurance funds to buy gold, among others. He said during World Gold Council chief executive, added that the probability of all the drivers for the gold price going higher is still there because it seems we are in for a few more years of turmoil before we settle again, which is all supportive of the price. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
I think investors are buying gold again, and why they're going to be selling the dollar is the odds shot up for Kevin Hassett to be the next Fed chair. And if you look at Polymarket, he's now in first place with a 55% chance of being Trump's pick to replace Too-Late Powell. 55%. The number two guy is at 21%, Christopher Waller, and then Kevin Walsh is down at 14%. So it's really narrowed down to those three guys, and Kevin Hassett is now the odds-on favorite to be the next Fed chairman. And of all of the candidates that Trump was considering for the job, Hassett is the most dovish. But not only is he likely the most dovish, but he's also likely to do what the president wants. He's probably the most loyal Trump supporter, being, his chief economic advisor. But I think that if Trump wants to put a puppet as Fed chairman so he can pull the strings, Kevin Hassett is the puppet that he's going to pick. So this, I think, is very negative for the dollar. It means a weaker dollar. It means higher inflation, and it means, higher gold and silver prices. I mean, that's why the rally continues. Gold's now up $17, up another $6 from when I mentioned it before the commercial break. So we're now at 41.47, and silver is now above 51.50. It was actually just below when I mentioned it. So it's up 11 cents. So the markets are very strong, and that is one of the reasons for this. So we've got the December rate cut back on track. We've got a super dove teed up to be the next Fed chairman, and the economy is weakening, right? They are, trying to figure out what to do. Trump is starting to roll back tariffs left and right, recognizing that they're not doing what he had hoped, but the economy is in trouble. He's trying to find ways to lower prices because affordability is the big problem, and he worsened that problem with his tariffs. And so now he's trying to reduce prices by removing tariffs without admitting that the tariffs are causing prices to be higher, which is obvious because if removing tariffs lowers prices, then imposing them has to raise prices. It's impossible for that not to be the case. But also, the other thing that I think is going to help the gold market is the air coming out of the Bitcoin bubble and the crypto bubble. And, no better example of what's going on there is in the stocks, these companies. And MicroStrategy, a warning, because I think it was Morgan Stanley that came out and said, there's a good chance that the indexes, the global stock market indexes, like the world MRCI index, that they're going to kick MicroStrategy stock out of the index. And that means that companies that are tied to those indexes that now own MicroStrategy or strategy. I keep using the old name. I joked they should have changed the name to Micro, because that's where the stock is going as opposed to strategy. I saw some joke online where they named the company Tragedy instead of strategy. A strategy. Tragedy is probably another good name for the company. But anyway, it's strategy. But if strategy is kicked out of these indexes, that means a lot of index funds that bought it are going to sell it. Now, I 100% agree that strategy never should have been added to those index funds in the first place, because it's not a viable business. I mean, there is some kind of software business buried beneath that Bitcoin balance sheet, but it is so small, it is inconsequential to the stock. All MicroStrategy is a levered Bitcoin ETF. And why should an ETF be in an index of stocks? But I think as the air comes out of the Bitcoin bubble, where are disgruntled Bitcoiners going to go? Well, obviously, I mean, some of them, may try to gamble, with other, tech companies, or who knows, right? There's some part of the Bitcoin trade that isn't really looking for an alternative to the dollar or looking to gold. But there certainly is a percentage of people in Bitcoin that were under the delusion that they were buying some kind of supercharged version of gold, that it was digital gold. And so they bought it. But now that its performance is so bad and the performance of actual gold is so good in comparison, I think a lot of that money is going to start moving into gold. And I think a lot of the money that maybe was on the sidelines, that wasn't buying gold or Bitcoin, but where Bitcoin was kind of killing the gold story, I think now that, the Bitcoin, fever has broke, and now the gold story, looks a lot better to a lot of fund managers who now are not going to say, well, gold, what about Bitcoin? People might buy Bitcoin instead of gold. It's going to be pretty obvious that that's not the case. The central banks want no part of Bitcoin. They're buying gold. And so investors are going to be discovering gold. I think we've already seen the lows for this pullback. We've seen the lows in silver. We've seen the lows in gold. We've seen the lows in this pullback in the mining stocks. And we are all pumped and ready to go, hitting new highs, probably even before the December FOMC meeting.
What do you think of today's show? Do you believe that the current gold and silver sell-off is some sort of coordinated attack against the metals, or on the contrary, is just big players taking profits after an abnormal rally? Post in the comment section your plan for gold and silver, and share with the stackers if you are taking any profits after the mega rally we experienced this year so far. Now, peep this video right here because it's a perfect fit for you, and I'll see you on the other side.